Welcome to the Bullseye Breakdown, the podcast where CEOs, founders, and leaders of industry break down big decisions, big wins, and big lessons. No fluff, just real talk. Let's get into it. This is the Bullseye Breakdown. Hey friends, welcome back to Bullseye Breakdown, the show where we go straight to the heart of how real entrepreneurs build, scale, and stay sane doing it. I'm your host, Dustin Weaver, and today's guest is someone who knows the startup hustle from every angle: legal, capital, banking, and even podcasting. Robert Burnett is the director of startup banking at Grasshopper Bank, and he's been in the trenches with founders, helping them raise money, build infrastructure, and avoiding the classic finance traps that take out way too many great ideas before they have a chance to fly. Before that, he was the CEO of Net Capital and has worked with everyone from tech stars to the Michigan Entrepreneurship Clinic. Today, we're breaking down what it really takes to build financial systems that grow with your startup, how to approach banking like a founder, not a spreadsheet, and why the right bank partner might be your startup's most underrated asset. Let's get into it. Rob, welcome to Bullseye Breakdown.
Appreciate it, Dustin. I'm happy to be here. Thanks for having me on.
Well, I am so excited to talk to you because you are in a very interesting position because you've seen every angle of what CEOs go through having been a CEO. And in your current position, you're working with a ton of founders and CEOs that are looking to find the right way to scale and grow their business. Tell me a little bit about your journey. I would love to hear how you got to where you are today.
Yeah, thanks, Dustin. It's been a bit of a long and winding road. So I, in the past, have been a co-founder. I think about my entrepreneurial journey in kind of two sections. So there was post-undergrad, pre-grad school, where I didn't know what the heck I was doing. I was a dumb 22-year-old who basically stumbled upon a couple different things. I helped co-found a tea company, which was a really fun thing to do in my early 20s. Learned a ton. Then I ended up going to law school. I realized very quickly I did not want to be a lawyer, but I happened to go to the University of Michigan Law School at a time when entrepreneurship was thriving there, and it still is, but they had a real concentration of entrepreneurial-focused classes, professors, kind of programs within the law school. So I ended up getting to spend 3 years focused on venture capital, early stage company growth, kind of all from a legal perspective. And then after graduating from Michigan, I did take the bar, I passed, but I decided I wanted to be in the world of startups. I was an associate with Techstars in Detroit. I landed at a company called Net Capital in 2017. I was a business development associate. And over the course of about 7 years there, sat in basically every non-technical seat you could sit in a startup. So I was a business development person, sales. Right. I ran the business development team. Then I started taking over other parts of the business as we scaled and everything broke. So I built and ran a customer service team. I built and ran an operations team. I built and ran a customer success team, ultimately kind of doing all of that at the same time, becoming COO of the company. And then after a merger with a public company and some changing up, I ended up taking over as CEO of what was then and still is now Net Capital Funding Portal, Inc., which is a regulated funding portal financial institution that sat underneath Net Capital, Inc., which is a publicly traded company. And so I got to run that subsidiary as CEO for a couple of years. For all of that, it was kind of time to move on. Found this opportunity at Grasshopper to go work all day, every day with entrepreneurs, helping them grow and helping the bank itself grow with this kind of really interesting customer base. And it felt like a really great opportunity for me. And I jumped on board. Been here 7 months now and I'm really loving it.
That's awesome. Yeah, and I can see that it's a natural progression and an understanding of kind of seeing the flip side of that. I tell you what, working with entrepreneurs is so awesome. Just having the opportunity to do this podcast, there's just a certain energy that is on display every day, whether it's they're on their highs or lows. Everybody is there trying to make something happen. And it's oftentimes, groundbreaking or shattering of norms. And so being able to be around that is, I'm sure, very rewarding.
Yeah, I mean, entrepreneurs as a customer set are, like you said, very interesting because at Net Capital, they were my customers as well. So for the last 7-8 years, basically CEOs and founders of startup companies have been my customers. And it is like you said, it's incredibly exciting. Everyone's trying to build something. also incredibly sometimes tough personalities to work with. Some people who are super coachable, some people who are not very coachable. A really interesting set of people. But ultimately, I kind of agree with you. Surrounding myself with people who are trying to build things, I find that to be incredibly energizing and just really interesting.
Yeah. Yeah. And, let me ask you something. Do you kind of niche down in where you're kind of focusing with Grasshopper, or is it just kind of industry agnostic? Anybody that's got an idea, they're coming to you and it's making it happen?
Yeah, we're really industry agnostic. And I've always found myself to be a bit of a generalist. I like the kind of nitty gritty of building companies.
Yeah.
I like the hiring. I like the operations. I like the finance stuff. That's what I like.
Yeah.
So I'm not like a passionate biotech person who needs just a company's a means to an end. I actually, to me, the kind of building of the company and the team is kind of the end in and of itself. That's what I really love and enjoy.
Yeah.
And so in my kind of entire entrepreneurial life, I've been very agnostic and very much a generalist.
Yeah.
And that includes, for the record, like I like small businesses. I'm involved in one on the side for fun that will never scale. I like businesses that are in retail or direct consumer. I like all kinds of stuff. I don't kind of try to limit myself to just kind of venture backable, Series A, Series B, kind of that, even though it's a really exciting space to be in. I kind of see entrepreneurship much more broadly.
I started this podcast because I was looking for inspiration. And I read a book, and I've said this multiple times on this podcast at this point, but I read a book called The Hard Thing About Hard Things by Ben Horowitz, who was an early player at Netscape with Mark Andreessen. And they obviously have Andreessen Horowitz now and are large in the VC space. But, my clients and what I do are mid-cap. And when you're talking about a $250 million VC raise or exit strategies, buyouts, stuff along that lines, it's not necessarily kind of like the day-to-day. And I wanted to be able to understand kind of that space. What's awesome is it sounds like you have the ability to play in all those areas. And that is so exciting. And I want to go a little bit different through this process today, just because I think that you bring a lot of insight into maybe what is the better way to look at things, and how, as you are trying to grow from the funding side of the mark, what somebody is going to be looking for if, somebody's trying to scale and they're working through, or how you look at how companies are staying ahead of the curve in their industry. And I want to take this as more of a learning experience for the listeners. So y'all, if you have a business or you're thinking about starting a business, or if your business is booming and you need to scale it, this is the podcast for you to be listening to. We need you to be here to have an understanding of what the best way to move forward is. How's that sound to you?
Sounds great to me. Let's dive in.
Awesome. All right. Well, cool. Well, let's go into the first segment, and we're going to, like I said, we're going to run this a little bit differently, but the first segment that we run through is the pressure test. Typically, this is where we talk about what the day-to-day struggles are, the hurdles that you see as your business is running, and kind of what you do to get past them, how you live life, and what the answers are for the common questions that arise for you in your industry. And I think it's interesting. I'd like to come at this both ways. I'd like to hear from a funding aspect, what the hurdles of finding these players are. And then also from the applicants aspect.
So when someone's looking for financing, I've been lucky enough to kind of sit in kind of two places, right? So, the bulk of my kind of most recent career was sitting as, running basically a marketplace for companies, investors to find each other. We did equity crowdfunding. And so people would want me to be writing the check, but obviously I wasn't. And then now sitting in the banking seat, we help companies with debt options and things like that. But ultimately my job typically is to sit there and go, I'm here to help. I'm here to help to put you in a position to go raise. And so I end up in the both enviable and unenviable position of sitting here with lots of different founders of lots of different stages, trying to help them get funding.
Uh-huh.
And I think that like the biggest challenge I run into constantly is, and I tell this to entrepreneurs all the time, an entrepreneur's business is their baby. And everyone thinks their baby is beautiful. But the reality is that
There's some ugly babies.
Some people have some ugly babies. And I say that being very nervous about that because, I think we both bonded over this, Dustin. We both have young children. Like, I actually like kids. I think a lot of them are very, very pretty, even when they, aren't.
Yeah.
I'm going to stop that line of thinking. But anyway, so a lot of people have ugly babies when it comes to their business. And beyond that, I think that there's something that's key that a lot of entrepreneurs just simply do not understand, which is the paradox of any kind of startup is you can only be basically one of two things. Either you're doing something that's obvious, in which case you're probably already too late. If you walk up to everyone on the street and you tell them your idea and it makes total sense to everybody, you're almost certainly too late or not big enough, right? In order for a startup, and Peter Thiel, like love him or hate him, is famous for this when he says basically you need to take, in order for your startup to be really, really big, $1 billion big, there's other places to be successful here, but in order to be really big, you essentially have to take a strong stance that's against the prevailing wisdom, and you have to be right. And so what a lot of people do not understand about pitching their business to try to get investors is that if they're doing it right, inherently, people will not understand or buy your pitch because you have to essentially be taking a stance that is counter to conventional wisdom in order to be innovative enough to carve out some market share as a startup and be successful.
Yeah.
And so people do not spend enough time building their story, flexing their storytelling muscle. Mm-hmm. People just think that it's obvious because they see it. You think about any entrepreneur listening, right? You've essentially done an incredibly irrational thing, which is given up whatever career or prospects you have, whether it's a steady job, climbing the corporate ladder, a steady paycheck, you've given up all of that and you've decided to start your own thing, which has a 95% failure rate. Yeah. You're inherent and because to you, whatever you're trying to do is so obvious that it's clearly going to be better than, a steady paycheck, at least, if not going to make you fabulously generously wealthy. Right. But you are the only one who sees it that way. Everyone else thinks you're kind of crazy. Yeah. Even venture capitalists who are kind of tuned to the idea that, I got to back some crazy people. And all of that is a big wind up to say that you're not, I basically guarantee any of you who are listening to me are not spending enough time getting your pitch down and getting your storytelling right. Really getting the story right. People just think they show up and they can pitch, and entrepreneurs are terrible at pitching. You think your baby's pretty, therefore you don't spend the time to truly explain it, and people won't get it. Yeah. So that's the biggest piece of this. The other tangential piece of this that I always try to talk to entrepreneurs about is the fact that a lot of you are too focused on venture capital. Sure. A lot of entrepreneurs just simply, and not even just venture capital, actually, I should revise that. A lot of entrepreneurs have this fantasy of the nameless, faceless, rich person believing in their idea and just writing them a check. And that is not how the real world works. You have angel investors who want to be involved, or you have venture funds that have very well-defined theses and are very accountable to LPs, and you have to fit that thesis. And especially if you're looking for venture capital, you have to understand that your business essentially has to have the ability to grow big enough to return the entire fund by itself. This is very basic VC math that I really don't think we should have time to go into on this call. But the point I want to make, again, is to kind of keep recapping. You think your business is better than anyone else does. You're not spending enough time storytelling. And then most of you are too focused on the wrong type of investor. There's a small sliver, 1% to 2% of companies that are going to be a really good fit for venture capital. Everybody else needs to figure out other ways to finance their business. And I think too many entrepreneurs get sucked up in the culture of, I'm going to go find angels and I'm going to go raise my Series A and it's all going to be great. And not enough of them are thinking, how can I get a loan? How can I leverage my customers and just start selling and sell profitably and bootstrap? All that stuff. So I've gone on long enough. But that when you talk about hurdles to financing, those are the big things I see
Sure.
every single day.
Yeah. Well, it's interesting too, because you talk about the two different ways you can go about it. And, I think I may have explained this to you. I started my company, Brand Builder, as a stopgap from making an app. I needed something in between when we were in the process of this. And I have an app that is sitting in the wings that, I think has potential, but I started Brand Builder, and it's not something that anybody's going to send VC for. A growth marketing agency, you're not going to get VC for. And it's also not something that you can really get a loan on, right? So my option was for Brand Builder is it's 100% bootstrapping. And so when you're looking at these options, it's really three options, right? Like you have large scale investment, whether that be through angel or VC, right? You have traditional banking financing, which is so hard to come by if you are
so hard.
You got to be in business for 2 years. Otherwise, you're going to have a predatory loan that has a 50% interest rate and you're paying on a daily return. Which
it's
is
impossible.
silly. Yeah. And you're never going to, you're just wasting money in that regard. Or that third option of, like you said, is you figure out how to build your customers and bootstrap from the ground up, which is undoubtedly the hardest way to do things because you're so exposed. You're so exposed. If anything happens that is detrimental to the business, your personal finances are under scrutiny, then your personal credit goes out the window. It's tough. It is hard to bootstrap something and be successful. And so looking at those options, in terms of each one of them has their own hurdles, right? Like you said, if you have an idea
100%.
that you think that you're going to get VC from, and let's just say someone gives you $5 million. If someone's going to give you $5 million, like you said, that company has to be able to profitably return $5 million in a pretty defined timeline, or else they're going to, cut bait and that's the end, right? You're done. On to the next thing. And it's always interesting to me, the serial startup people that I talk to, because, the curious thing to me is what do you do? When that goes, what point you're man, I'm done, right? And Alex Hormozy is a really good example of this. He talks about it on LinkedIn. He's like, dude, I had 9 businesses fail before I actually, got to the point where I'm at. And I actually commented on his last post when he was talking about it. I was like, when that first business failed, what did you do? How did it affect you? And how did you get past that? This is the stuff and the reason why I started this podcast, because I think that there is a lot of people out there that really want to know, when the cookie crumbles and the shit hits the fan, what do you do? How do you get past that? If you go into this with an 800 credit score and then, oh shit, a year and a half later, you're at a 400, what do you do? How do you rebuild and restructure or pivot, conscientiously calibrate your business to effectively move forward?
And it's brutal.
It is. And so I'm hearing from your standpoint of where you are currently, that's a lot of the guidance that you might give some of the people that are coming to your table now. Am I wrong in saying that?
Yeah, no, I think that's right. And I think that here's what a lot of people listening won't hear, but I'm going to say it anyway, right? This isn't easy.
No.
If it was easy, the opportunity for wealth wouldn't be there. And I think what so many entrepreneurs are desperately looking for is the easy button. Oh, someone's just going to write me a check and it'll all be easy. It just isn't. And if you're waiting for it to get easy, it's not going to happen. Because like you said, even when you raise that $5 million, that's the starting line, not the finish line. And so, yeah, I think a lot of people call them whatever you want, entrepreneurs, people who aren't getting it, people who are just kind of they have their startup and they're just, I don't know, living on savings or whatever. You just have to be willing to push so much harder, so much further, so much quicker, and be a sponge and be adaptable and learning and growing and have a growth mindset in order to be successful in any of those 3 ways you want to build your business.
Right.
And I think too many entrepreneurs just want it to be easy, and it's just not.
Yeah.
I've been lucky enough that I've never ended up in a place where my credit score is horrible and I'm about to lose my house. And I know people who have, and I know people who've gotten close, and It doesn't have to take you to the very absolute brink, but it's hard.
Yeah. Yeah. And that's the important thing, is understanding. I think just hearing it from people like you and I, of like, that's the reality. If there's one listener in this entire whole experience that I get through to, and can make them feel better about the fact that, like, hey, they're on the right track, and it's okay to have failed to this point, and you have to be able to continue to push. And like, that's the thing, is like, the perseverance is what takes you to that next level, but it's also smart perseverance, right? Like, the definition of insanity is doing the same thing over and over and expecting the same results, right? So thanks, Albert. And so Einstein said that. He's pretty smart. And so anyway, I think that is a good kind of primer to understand, like, that's the baseline of building a business. To your point, it never gets easier. You get a better understanding of how to operate under the stress, and you understand how to manage the challenges a lot better. The starting point of being crazy enough to just say, screw it, I'm going to go out and do my own thing. Not everybody can do that either. There's a fear of failure, fear of success. You know, you've got imposter syndrome that abounds. But once you make that step, you are 90% of the way through, because that is like, that first step is probably the hardest step that you're going to take. Now, don't get me wrong. That extra 10% is a really big 10%. I just put a lot of gravity on actually taking the chance and betting on yourself and realizing that, you know, it's sink or swim. And so, you know, to your point, once you get into that next level, there is not going to be an easy button. There might be somebody that strokes you a check, but also, to your point, that's the starting line. Then you got to figure out the next bit of it all, because then you're beholden to a bank or to a VC or to an angel investor that is wanting to see return on investment, you know?
Yeah, exactly.
The next step is, how do you actually take this baby, be it ugly or beautiful, could be the Gerber baby. If you don't know how to grow that baby into a small child, and just taking the analogy a step forward, with the correct scaling opportunities, then you're going to be stuck, and that baby could turn ugly quickly. So from there, I think it's a really good opportunity for us to move into that next segment, which is scaling secret. Let's talk briefly about what you do to, again, go out and find the people that are now coming to you, and how you're looking to scale Grasshopper. But then on the alternative side of that, I want to talk about, like, once you actually have somebody under your wing, what your goal is for them and how you build them out.
Yeah, those are two great questions. And so to kind of kick it off, my experience is that scaling is essentially about two things, and both of them are hard, and a lot of them aren't. Well, that's what a lot of don't pay attention to, which is essentially sales and operations. Product is super important. It's probably baseline, but a lot of people underemphasize sales, and they underemphasize basically operations, systems, and processes. But then on the flip side, the other thing that I have found a lot of success in my career doing is essentially customer success. It is, how do you take someone who has either purchased from you or is part of your program, at this point, part of the bank, and say, okay, my job now is to make you successful. So what I try to do right now is spend as little time as possible talking to them about checking in a savings account, and as much time as possible saying, all right, you're an entrepreneur, I've been an entrepreneur, how can I help you? Mm-hmm. So I want to get to that in a second. But kind of circling back, as I scaled companies, it seems obvious, but sales are everything. And there are some entrepreneurs who take a really aggressive, sales-minded approach to growth. And honestly, I think that's great. I've never actually been super comfortable with super aggressive sales. It's not really in my nature. But what I recognize is that companies, it's obvious, but people don't say it enough, companies live and die by sales. It's the only thing that matters is, can you sell your product? And I think that beyond just, bringing in a bunch of fast talkers who can call people and try and pressure them into sales, is how do you build a really efficient sales organization? So not just a bunch of sales guys in a room making calls, but how do you find leads, cultivate those leads? Then how do you create a good not so much script, but like set of processes for your salespeople to find the right people and to close them. And then how do you hand them off well into your organization so that they have a great experience?
Yeah. Building the flywheel and making it repeat.
Building the flywheel.
Yeah.
And spending time and thinking thoughtfully about it. And I will encourage every entrepreneur, call it a hack, call it just some advice. I spent a lot of time. Like if you were to like have a webcam watching me work, I spent a lot of time just thinking through strategy.
Mm-hmm.
And I think that not enough people appreciate the difference between strategy and tactics. Strategy is where you're going. Tactics is how you're going to get there.
Right.
Understanding, like I have written and rewritten and worked on and reworked on the strategy for growth at Grasshopper. And I did the same thing at Net Capital before that. Because if you don't have a good strategy, you're not going to go anywhere.
Yeah.
And only once you nail down your strategy can then you evaluate what tactics are working. A high-level example of this is Grasshopper Bank is a digital bank. Our strategy is to acquire customers digitally at a very high level. We want you to find us on the internet. We want it to be easy. We want to acquire our customers digitally. So what that means is that every time someone comes and asks me if I want to sponsor an in-person event and fly out to Minnesota or Austin or LA, I have to evaluate, does that fit with my strategy? Mm-hmm. Especially in an environment like most people where I've got a very limited budget and I've got limited time. And so I'm able to say, no, my strategy is digital acquisition. So am I going to spend $10,000 on a plane ticket and sponsorship and hotel rooms, or am I going to spend $10,000 on digital ads? And I'm probably going to go digital. And that's a very high level crude example that doesn't really get into the details of what I'm trying to do.
Yeah.
But understanding that. And so I've got a CEO coach I work with. And one of the things he constantly reminds me of, and for the record, if you're a CEO, get a coach. Very good.
Yeah.
That's an aside, but I really like it.
We'll come back to that.
Mirror to yourself.
Yeah, we'll come back to that. That's a good point.
With one thing he constantly reminds me of is like, if I go out and take a walk and think about the business, I am working. That's not me skipping out work. That's not me being lazy. Mm-mm. If I go for a bike ride or exercise and I'm thinking about work and I'm working through the strategy and the tactics and really laying things out, as long as I'm doing it in my mind, that's work. It's not avoiding work. Work is, often we think work is responding to the emails and sitting in on meetings, but you got to spend time as a leader thinking.
Yeah.
That's important. So that's my kind of spiel on sales and other things. But then operations, I cannot emphasize this enough, especially when you're trying to scale a company. So I was with Net Capital. We started with 5 people. We ended up about 40 people by the time I was done. That's not massive scale, but a lot of things change between 5 people and 40 people.
Yeah.
And one thing people are just bad at is communication. People just are bad at communicating. Anyone who's ever been in a relationship knows that people are bad at communicating. People are bad at it.
I was about to say, have you been talking to my wife?
Yeah, I'm just saying. Like, I love my wife. We've got a great relationship. Communication is hard.
Yeah, it is
hard.
Yeah.
And if you struggle to communicate with the love of your life, your best friend, like think about like an employee or like virtual companies. People are just garbage at communication.
Yeah.
And so documenting processes and really thinking about how do you want information to flow? How do you want decisions to get made?
Yeah.
And then writing that down and making sure everyone's clear on it is seems so simple, but nobody does it. And it makes it really hard to scale because the essence of a startup company is rapid growth.
Yep.
And when you grow rapidly, what that actually means in practice is that everything breaks all the time. Well, the perfect example for me is we had a day during my years in the Capital where we had a customer come and they raised $1 million in a day, which for us was they sold out. It was wild. But at the end of that day, it happened to be a Thanksgiving day during COVID. It was chaos. They broke everything. Our servers didn't work right. People were struggling to check out. And then, at the end of all the chaos, we had 1,000 unanswered customer service emails because we basically didn't have a customer service team. And I had to take 3 weeks to dig out. I personally sat for hours and worked with my team, and we dug out for 3 weeks. We dug out from under the mountain of customer service emails and people who were having trouble. And in that 3 weeks, we also built an entirely new process to service our customers. And the result is that for basically then on, we were getting back to customers within 24 hours, often within an hour. But the point of that is, like, if you have any form of success, every one of your processes will break. You will find every single bottleneck, and it'll break all the time. And so if you're not constantly thinking about how do I communicate well, how do I write stuff down, how do I constantly improve processes to make things efficient so I'm not doing the same thing over and over again, or fixing the same problem over and over again, you will struggle to scale.
It's like you have a window into my soul right now, Rob. It's crazy. In hearing everything that you're saying right there, personally, where I'm at, I am looking towards growth and looking towards the next stage of brand builder as a whole, right? And so I've actually got, assistance in terming and figuring all this out in terms of the strategy and the tactics that go through. I use AI a lot. It is such a great way to just save time and energy and get your thoughts down on paper and kind of work through. And once you can build something out that is really kind of another version of yourself and you can talk back with it, it's phenomenal. Working on communication, getting SOPs in place, making sure that, the processes are there to, once you go from having 6 main employees to 20, what happens there and how do you effectively communicate the best way to make things happen? You can't do that on the fly. And going back to what you're saying, like, if you are scaling and if you're growing rapidly, then you should be looking to break everything on a daily basis and figure out how to fix it to make it more efficient and better. And, again, using AI to kind of model some of these things, it helps you kind of build through that. And the tactics of getting to the strategy are key. And everything that you have just said there really hits home. Being able to understand that, again, hearing it from you and having the ability to corroborate it. If there's one person listening that understands that they're doing something correct because of that, then we're winners today, right? Like we
100%.
We have passed the buck, and this podcast has done what it's supposed to do. So,
and I want to make one comment because you mentioned AI, and I've got a hobby horse piece of advice for entrepreneurs, because I did this, and it was one of the best things I ever did. In the world of AI, so unsolicited advice for everybody. In the world of AI, things are going to happen so quickly. And it's going to be really easy for you to tell employees, go to ChatGPT or you pick your language, your model, and say, build me a strategy for X. But obviously what AI often, if it's used incorrectly, it's easy to it'll just produce a plan for you and you just follow the plan and you don't think critically about it.
Right.
So one of my favorite books on business is a book called A World Without Email. It's by Cal Newport. He wrote, he's more famous for his work, Deep Work, which is all about focus. And A World Without Email's thesis is essentially that email is and kind of generally digital communication is very asynchronous and very disruptive to our ability to focus. And his thesis is that as knowledge workers, as many of us are, or if you have employees, what do you want them spending time doing, right? If you have an employee whose job it is to build decks or to do creative work, and do you want them spending, an hour trying to figure out how to get reimbursed for their travel? Or do you want them spending time thinking about how do I book a call with Dustin so that I can meet with him to discuss this really important thing, right? And so the point is that the book is all about how do you create process around all the things that don't take any brain power, so that you don't ever have to worry about how do I get reimbursed? How do I do these things? How do I schedule a call? How do I move this project from one team to the next? You smooth all that out. And then you try to limit asynchronous communication, i.e. sending an email, because when you have to respond to an email, you have to think and then write and then respond, and it's very mentally taxing. And I don't really need to talk about all this because I want to teach you all the book. What I want to say is that what I did was I had a small team trying to build out, basically revamp our customer success program.
Sure.
And it was a really complicated customer journey where we were doing a lot with them and they were getting frustrated. And so what I did was I bought 10 copies of that book, and I mailed it via Amazon to each one of my employees. And over the course of like 2 months, we read the book together. And I underlined it, and every week we met and we read a couple chapters. And then after each chapter, I was like, okay, what did you learn in this chapter, and how can you apply it to our business today?
Right.
What processes do we want to change? And that slow learning process and that like interaction with me and my employees and that kind of like reading, I tell you what, we were a different company at the end of those 2 months than we were at the beginning. And it took a little bit of time, but oh man, it changed how people thought about everything they did.
Yeah.
And it supercharged the productivity of the people around me.
Yeah.
That was a tangent, but I wanted to put it out there.
Well, it's a good tangent because what it actually sheds light on is not being afraid to blow up the system and recreate it. And what may seem like a step backwards is actually 10 steps forward, because you are taking time out of your workday to be more, be more intentful, have more intent about how you're working through the day and what the process is of getting from point A to point B. Because as more business comes in the door, as you become busier and busier before you can start growing and scaling, you have to be as efficient as humanly possible to make sure that, if your team's billable hours are being set, that they're getting the most out of their day. You're getting the most out of your team, and they're not feeling bottlenecked by processes that you have put in place to allow them to do their job. You have to free them up to be able to be the studs that they are in whatever, position that you have hired them for. Because obviously
100%.
If you have a team and you have built out a team and you are a leader in which you're trying to grow and cultivate that team, there's reasons why you have put these players in their positions. Let them play. Let them be what they want to be. Don't sit there and hinder them by stupid processes that make no sense.
I love it. And just to expand on it, right? Like, hem them in where their talents don't make any difference. Don't let like one person use Slack and someone else use Microsoft Teams. Like, silly. Just no, this is what we do, right? Like, but when it comes to like if they're creative or don't tell them what colors to use, let them go nuts.
Yeah.
Like, just let them go crazy on everything that involves their talents, and then create really clear, easy process for everything else so that they don't have to think about and waste mental energy on that stuff.
Yeah. We're kind of going a little bit non sequitur there, but I want to make the comment back to the reason you hired somebody for their talents. Trust in their talents. Trust in your hiring decision. Micromanaging doesn't lead to growth. You have to allow the creativity to blossom and give them the facilities to do that. And that's not just talking about somebody who's building out a deck in Canva or, Illustrator. I'm talking about like you have an engineer, like you can't, to your point, lock them down, but there has to be a consistent way of people working, right? So I agree with you. Get everybody on Slack. Try and pick a horse and stay on that horse, even if it's not perfect.
Yeah.
So we made it to Notion. I was like, this is it, guys. We're going to make Notion work. Notion has the capability of kind of being all things to us. We have to build it out and make it work for us. And you have to get everybody on board with it and get them the training and the support that they need. You have to get your processes in place and put a lot of effort into the outreach in the correct way, right? You talked a lot about sales. One point that I want to make about sales, and this is so key, and I talk to my clients about this all the time, is the shotgun approach to sales no longer is something that will work. Ads cost a lot of money. If you go willy-nilly into it, you literally can waste so much, it's not even funny. So you have to know who your avatar is. You have to do an in-depth understanding of what your ICP is, your ideal client profile. Knowing who is going to buy your widget and then crafting the offer around that person is so key to saving you time, energy, and money. Then once you're doing that massive sales effort, your conversion rate will go through the roof because you are putting your offer in front of the people that will buy it. If you just go and, I'm selling hair loss, cream for men, and I go just do a blanket meta ad and it goes to 50% women, who's buying it? Yep. If you're trying to sell a piece of technology and you end up in front of grandmas across the country. Not to say that grandmas can't use technology, but they're not typically the ones that are going to be on the forefront of technology. So understanding that and really, honing in on the processes in which you are actually making the business happen, and then understanding as you go into the sales portion of it, who you're selling to and making sure your offer is getting in front of them. Those are two paramount non-negotiables for growth.
I agree. You're preaching to the choir. I think it's exactly right. Hit the nail on the head.
Good. I'm glad that we're on the same page there.
100%. No, nothing to add.
Good. Perfect. Well, cool. Well, is there any other aspects to scaling that you might want to talk about before we move on?
Yeah, I think that just I'm very much like a team guy. I love building teams. Like I'm the guy who when he played Madden had more fun in the off season trying to build my new team than
that's where the money
games.
is.
I'm just saying.
Yeah.
So I'm weird like that. But I think that, essentially my advice to entrepreneurs is I tend to find that there are two general types of entrepreneurs. There's the CEO type, which is great. But there's also I sometimes call it the mad scientist founder. It's also just the product focused founder. They're the person who wants the product to exist in the world, but the company's only a means to an end.
Sure.
If you have the kind of self-awareness to know that you're in that second category, consider bringing on a proper CEO. And the reason why I say that is building a company just requires you to wear a million hats, and you kind of gotta love them all.
Yeah.
You gotta love the finance and the books. You gotta love the operations. You gotta get into the sales. You gotta do the HR, and not just the boring HR of filling out the part. You have to go interview and hire people, and you have to train those people.
Yeah.
And you should train them in your image, and you should care about them. And I think a lot of people are way too flippant about essentially all of that. And I could go on forever about hiring, but I think hiring is just smart people will tell you that it's the most important thing, but then it's so important that they just kind of gloss over it. Spending time finding the right people to grow with you, you're going to spend so much time with them. Spend some time thinking about it. And the number of entrepreneurs who just oh, that person can do the job, just hire them. It blows my mind. You're not spending enough time thinking about hiring. You're not spending enough time cultivating your team. And you're definitely not spending enough time training your team. I guarantee it. Basically, there's no one who's listening to me who's spending enough time training their team.
Oh, yeah. I'm definitely included. I think that training is one of the...
I'm included. I'm including myself in that. I don't spend enough time.
No, I don't think you really can ever spend enough time. But, that's kind of the dichotomy of hours in a day. How do you effectively make a training regimen that's going to be able to be effective across all of that? That goes back into process and implementation, creating of SOPs and working down that road. You should always have a student mindset in whatever you're doing. And even as a CEO, I don't train myself enough on a day-to-day basis.
Yeah, 100%. Yeah. Read books, play with AI, learn, grow, all that stuff.
I think that's all great information. Let's move on to the next segment of the podcast. This is the segment that I like to call the market edge. And typically in this section, we talk about staying ahead in the industry. For you, in your current iteration, again, we're going to work this two ways. I want to hear about what you guys are doing to really stay in the forefront of creating that online, entrepreneur-based bank option. And then when you look at the clients that you're working with, how you're pushing them to move forward and to look at their industry and be that vagabond, that front runner, vanguard, vanguard, not vagabond.
Not vagabond. You can be a vagabond too. Be the vanguard. I like that.
Sure.
Yeah.
Vanguard is better. And be the vanguard in their industry, whatever that is.
Yeah. So the reason why I joined Grasshopper and what gets me so excited about it is I really think we strike the right balance. So we live in a world right now that we're experiencing rapid digital transformation.
Yeah.
And banking can seem a little bit boring, but if nothing else, I'm sure a lot of you remember the SVB collapse of a couple of years ago. If that's not enough to prove to you that picking a good banking partner is an important thing, I don't know what else will be, right? And so what I like about Grasshopper is that I think we're kind of charting a middle path in a way that's really great. So the way I like to explain it to people is you kind of got three options in banking right now. And you can choose to kind of ignore it and just go down the street and just open an account. But like, I promise you're missing out if you don't think a little bit critically about your banking partner, because there's money to be made and there's efficiencies to be gained. And so there's the traditional banks, right? You've got, and those typically fall into two categories. You've got the Wells Fargo's and Bank of America and JP Morgan's of the world. They're massive. No one's ever going to get mad at you for having stashed your money in one of those banks. It's probably going to be really safe. But then you also have your local credit unions and all those great community banks that are doing great work. The problem with those banks for startups is traditionally two things. One is you don't typically have a very good personal relationship. And actually three things. You don't typically have a great personal relationship. Two is sometimes they just don't know how to handle a startup that maybe raises venture capital, that is running at a loss. They just don't know what to think about it or do with it. And then sometimes they're not very digitally focused, so they can take time and effort and energy from a founder. And I just spent a whole bunch of time talking about process and efficiency. You could take a lot of inefficiency around your bank, which is like not something you should be spending time thinking about. In the other end of the spectrum right now, there's a really exciting boom in fintech companies. There's all these great fintech players that are basically venture-backed, great products that make sending and receiving money and keeping your money really easy. Yeah. And the only real downside to those great products is the fact that they're not actually banks. Yeah. And the reason why we like our banking system is that, forget your ideologies, it's a pretty heavily regulated industry that's backed by the government. It's FDIC insured, all that stuff. And so, we saw recently, anyone can look up Synapse. It was a fintech connecting some fintechs to banks. And because it was unregulated, they weren't really doing things right. It failed, and it left a lot of depositors separated from their money. And it just highlights the risk of going with, even though all these companies eventually put your money into a bank, there's risk around fintechs and their business models and all that stuff. So you should be thinking about that as you move forward, especially if that's going to be like your primary bank versus just a tool you use to move money around. Mm-hmm. So at Grasshopper, we kind of thread the needle where we are a nationally chartered bank. We are regulated. We're talking directly to the regulators. We are a bank. We're only about 6 years old, and the entirety of our system has been built on new digital rails. And so the result is that you've got a traditional bank that both collects deposits and makes loans and is regulated. But we've got a pretty slick digital platform on which to build your business. So we can connect to your QuickBooks account. We can get you a really great credit card or cash back on your debit card, all that stuff. And, even sometimes I think about that doesn't sometimes sound super exciting to a lot of entrepreneurs, but I'm telling you, in this world, it used to be 5-10 years ago, go raise $1 billion and spend it all and just go nuts. Investors care a lot more about financial discipline right now and working towards profitability. And when you talk about the difference between, I talked to an entrepreneur. He's actually a friend of mine. He was a friend of mine before I joined Grasshopper, and he bought a business and they were working. And I just called him up. I was like, "Hey, you should come work with me." And he's like, "Well, go talk to my controller and see what we can do." And I was talking to them, and they were worth, they're kind of mid-level regional bank. They were earning zero interest on their money. And in fact, they were paying a couple $100 a month in fees to that bank. And I was like, well, if you come over to us, we will not only pay you for your deposits and interest rates, but we will eliminate essentially every fee you're paying. So the swing is going to be like a couple $1,000s a month per year.
Yeah.
And on the one hand, if you're a multi-million-dollar business, a couple $1,000s a month isn't the biggest amount of money in the world. It's probably not number 1 on your list, but it's probably also not number 20 on your list. And then if you're starting your business, having the foundation there, because most people, when they open a bank account, they never switch their bank. They will never switch their bank. So it's a decision you stick with for a long time. And one of the challenges in my business is, how do I get people to rethink it and kind of come over here? It's the great challenge of banking, but I enjoy it. And so that's why I joined Grasshopper. And that's where I think we sit in the market. And I'm really excited about that position. I like sitting in this position where we're at. It gives me a lot of leeway to be a really great option for a lot of different entrepreneurs.
Sure. And just going back, just for our listeners, in terms of baseline entrepreneurs. It could be somebody starting out a small business that just needs a banking option. You are not just a funding option. You are a true banking option.
Yep.
So working through that, it makes sense because you guys are business focused. That's all you're doing. You do not have personal banking accounts.
I should correct that slightly. We literally just closed a merger like a week and a half ago, where now we've bought another bank and we're going into retail. But that's down the line. We are traditionally and historically a commercial focused bank.
The Grasshopper portion of things, but and again, so you guys are focused on businesses. You're focused on helping businesses. I'll tell you a funny story. Personally, through Brand Builder, we're through Bank of America, and I just started the company. Didn't really think of anything, and there's a Bank of America that's about not even a half mile. It's a quarter mile from my office. Yeah. And so
it's a big bank.
Yeah, it's a big bank. They know how to handle money. So I went in and I set it up. And, about a year in, I went back and I was like, hey, I'm thinking about doing a line of credit. And so I sat down with the banker. I'm not 2 years in, so I can't qualify for SBA. So, I was like, just curious, kind of what are my options here? So he's like, yeah, I have somebody I want to put you in contact with. We can't help you, but I have someone I want to put you in contact with. Do you know who that person was? ADP for payroll services. Like you're taking my information and you're just trying to make money off of it. And so it really set me in, it put a bad taste in my mouth. So you may have a new client out of this just because. So,
well, great. And yeah, and I think that one of the things we try to do, because I think the second part of your question is like, well, how do we try to be helpful? And I think that, my philosophy here is trying to add, we're a digital bank, but we're trying to add the human touch in. And so what I'm trying to do is a little, I think they kind of did it wrong. But so what my goal is, there's a lot of entrepreneurs out there that we're not going to be able to give loans to.
Sure.
It's just the reality of the world. It's just hard. But what I do try to do is say, okay, listen, like what I work with most of my clients on is, okay, you're all set up. Great. If you don't need a line of credit yet, great. And then I just ask them, like, what are you working on in your business? Like, what is causing you challenges? And what we're building out between me and my team is a whole Rolodex of like, do you need insurance? Oh, great. We got a guy. Do you need a CPA? We got a guy. Do you need payroll software? We got you a deal.
Do you need growth marketing support?
Do you need growth marketing support? I got a guy. And that's where I think that a bank is as good a place as any to be a kind of node in your startup network as you entrepreneur grow. And so that's what we're really trying to build here is like a resource. And now we're getting it where we're using this as to build personal relationships where I'm talking to my entrepreneurs. I'm connecting them with all kinds of people in my network. And then also they're being reminded to come to me when they've got questions. And the result is a really great feedback loop of we're connecting clients to each other. We're connecting clients to trusted third-party partners. And then, and this is a trick for everybody here. I just had it happen the other day. We had we're building relationships with these entrepreneurs. We're getting to know them as people. And the result is that someone said, yeah, we do actually need a loan. And we said, well, you don't traditionally qualify, but let me actually just introduce you. I know you. Let me introduce you to our head of digital lending. And let's see if we have, if there's any wiggle room here.
Yeah.
And it turns out it looks like we're going to be able to get them a loan that because they, as we look deeper, we're able to put them into our credit box and it works. But that's way harder when you don't have that relationship. And so my real goal here, and for any entrepreneur who's, doesn't have a relationship with their bank, I'd be happy to chat with you. This is what I do all day, every day, is my goal is to get you in, get to know you, watch your business grow, and back and forth ideas, be a resource, just, sit in on a board meeting, sit in on an advisor meeting, connect you with a really great person over here. And at the end of the day, before you know it, you're 2-3 years in, you're starting to grow. And all of a sudden, all these banking products, deeper loans, SBA loans, all this stuff starts to open up to you. And because we've got that relationship, we can really go deep and find you exactly what you need. And what a lot of entrepreneurs don't want to hear, but it's just the truth, is that one, those relationships just really matter. And two, oftentimes you're not like, whoever you are, wherever you're at, you're often not ready to take on loans. Loans are just a hard thing to take on as an entrepreneur, especially early on. But I tell you what, you're going to get to where you're in a good position quicker than you think. And as soon as you get there, this is what banks do. And having a good relationship can be really helpful. And so that's what I'm building as I've gotten brought in here, and as I get kind of given the kind of authority to kind of build our startup practice and our startup line of business, is kind of bringing that real relationship aspect to an otherwise digital experience. And I'm finding that very enjoyable myself. And I'm finding that we're getting creating some real benefits for our clients, which obviously is just like super exciting to me.
Yeah. Well, I think it's a really good statement. I think you hit both points there of what you guys are doing and then what these entrepreneurs can do from a financial standpoint of how to be ahead of the curve, right? What I hear from you is that you are advising, whether it's through Grasshopper or through a community bank, as you are starting up these businesses, establish a connection with a bank, whether you want something or not, just having the ability to have that node, as you put it, in your back pocket so that they can see you grow. So as you get to the point there, we're scaling, you have the ability to kind of tap these resources and say like, hey, Rob, we're at a point where I've got the ability to do a $1 million contract, but I need $200,000 of capital to make it happen. It's all on paper.
Yep.
There's everything that's set forward. And I've been working with you for 2 years and you see kind of how my business is run. It makes it a no-brainer for you as long as all the stars align. So I think,
100%.
yeah, I think that's really good advice and something that, I need to heed. Luckily, I know you now, so
we got you covered.
We'll figure this out.
And I think the broader piece of advice here for every entrepreneur is that funding takes way longer than you think.
Yeah.
And you need to be thinking about it the long game.
Yeah.
And I'll give two anecdotes, right? So the first is this exact anecdote of loans in particular take a while, and it takes a while for a bank to get kind of comfortable with it. And credit people just want to say no all the time, and you got to like really work them, and you got to show them the different angles and all that stuff. But I tell you, there was another entrepreneur based out of Detroit. I met her a long time ago. And I don't actually know if my coffee meeting with her had any effect on her success, but I know that I gave her this piece of advice that she ended up implementing, and it could have been she had it on her own. So I don't want to take credit for her success, but I want to say, like, I remember I had coffee with her and I gave her this advice, which is, and it's something that Techstars tells everybody: create a list of investors who you think would be interested in your product and start sending them updates early, and constantly update them and show them your successes and your failures. And what she did was, for like 2 years, she built her business, didn't ask her about anything, but she constantly added investors to this list. She kept them updated on what they were trying to do, showed them the success, showed them the traction. And then like 2 years in, she's like, I need to raise a seed round. And she raised it in like 48 hours.
Yeah.
Because she sent a note to all those investors. And they're like, yeah, we've been following you for 2 years. We've seen everything. We're super comfortable with this. We're ready to go. I'm in.
Yeah.
And so it's, it's an overnight success, 10 years in the making kind of thing. Funding, just start now, start building those relationships, build it with your bank, build it with local angel investors, build it with VCs who are in your space, build those relationships early, so you can show them your success, because in a startup, that's kind of all you have is traction.
Yeah.
And you need to start kind of reminding people you exist, and that showing people really that you're capable of doing this, and show them the bad stuff too. Maybe not. The banks care less. Banks are much more looking at the spreadsheets, but investors, they care a lot about, oh, you messed this thing up and you learned from it.
Yeah. Yeah. I could not agree more. And it's pretty much plain as day that's, something that no matter what you're doing, it just makes sense to do it. Having the backing there and being able to build out that stable of support it's a no-brainer. I think that's excellent advice. So, it's a good segue into the next part of, nailing it down. The next segment that we typically talk about is called hitting the mark. And this is an opportunity to tell our listeners how you guys are really knocking it out of the park and what you guys are doing that works great. And, maybe what a common misconception of your industry is and how you kind of avert that. We've talked a lot about both of these things already, but, if you could nail it down into, a concise statement, what do you think you guys are doing at Grasshopper that's really upsetting the status quo?
Yeah, I think it's bringing that traditional banking stability to the digital age, growing digitally, and we're digitizing both sides of the house in a way that's really getting out. This is kind of nerdy and bank focused, but we are growing deposits digitally faster than basically almost anyone else in the market. And then we are digitizing our loan products so that we can quickly and efficiently send out loans. What I think we're doing really great here is if you come to Grasshopper, like I said, you can work with us. We are going to help you grow your business. You're going to have a personal relationship with a former founder, former CEO who's helping you run your banking and helping you grow. And we're building a relationship when and if you are able to, we can digitally lend to you in a way that's efficient and really good. And it means our business model is stable, which means we're stable as an institution. And it means that ultimately we're able to keep our fees super low and our interest rates really competitive. Some of those things we're not going to be the absolute best at, but I tell you, across the board, when you put us up against everyone in totality, I really like where we're at.
Yeah.
So that's what I think we're doing.
That's a great response. Yeah. And it's exciting, as an entrepreneur to know that there's somebody out there that is like that. I'm just excited about, again, like having the ability to have somebody that is supportive like that, not only for myself, I've got quite a few clients that I know would love to talk to you and would love to know that something like this exists because again, you guys are 6 years old, correct?
Give or take. Yeah.
In the grand scheme of banking, that is a blip. You guys are brand new. You're babies.
Yeah.
And you're not ugly. You're a pretty baby.
I back us. I think we look pretty good.
Man, well, let's move on to our signature segment. This is a fun one. This is just one that I like to ask people because in business, advice is plentiful and it's not always good. So this is the segment of the podcast we like to call the best bad advice. What is the one piece of business advice that someone has given to you throughout your career that was just utterly wrong or you said no to, and by doing so, you were much better off for doing it?
I got two for you. One's not really business advice, but I was thinking about this. So the first is I had mentioned earlier in the podcast, I went to law school.
Yeah.
And I just distinctly remember kind of multiple people, because I was the kind of rebel in law school. It was like, I'm going to go do this thing. There were multiple people basically looking me in the face and going, that's a bad idea.
Yeah.
You're going to be miserable, but what you should do is go work in a big law firm for 3 or 4 years and then go do whatever you want to do.
Yeah.
And multiple professors, people who did not know me were like, you're dumb. You shouldn't do that. I might have been, just for the record. But tell you what, it was like, and this works for everybody, right? People are going to tell you that you are dumb for trying to set it out on your own, especially if you're young. But I tell you what, by the time 4 or 5 years out of law school, I was the CEO of a 40-person fintech company doing really cool, innovative stuff.
Yeah.
Whether or not I was the most financially successful person in the world, listen, still, we weren't making all that much money, but I was the CEO at, in my early 30s of a 40-person company with investors, and I had done it 5 years out of law school. The rest of my law school classmates were still associates working 100-hour weeks in a law firm. And they were, I have got some really good friends who did that path, and they weren't the happiest people in the world.
Miserable is the word you're looking for.
A lot of them were miserable. I don't want to disparage them, right? A lot of them have great careers now. Some of them have made partner. That's all great stuff. But I'm just saying that when you chart your own path, and this happened to a lot of the people who worked for me. I plucked a lot of people right out of undergrad, or maybe it was their second job. And I gave them a ton of responsibility early. And I tell you what, if you join a small company and you take on a shit ton of responsibility, you can accelerate your career a ton. And then even if you don't make a ton of money at that startup, I'm now a CEO. I just totally changed the way the market looks at me versus how I was even a couple years ago.
Sure.
So that was the first thing. It's the world is filled with very clearly defined ladders to climb for people with no risk tolerance and who just want to follow the path and keep their head down. And that's great for them. But if you're listening to this podcast, you're probably not one of those people. Take the risk.
Yeah.
But then I'll give, this is a little more relevant advice. The thing I see a lot out there right now, and the two paradigm examples of this are Netflix. Netflix was kind of the first. And then I'm seeing a lot of this from Coinbase now.
Oh, interesting.
And it's basically these really big Silicon Valley companies. They're leading edge, printing cash, and taking this very, Netflix was famous for it. They said, we're a professional sports team. you play and you perform, but we will cut you in a second and we'll give you a great severance and we'll be very nice about it. But if you're not performing, we're going to cut you and you're off the team. And I see the same thing with Coinbase. They're basically have put out this manifesto about how like they only hire the very best talent and you have to be absolutely exceptional. And I see a lot of people taking that advice and thinking and trying to apply it to their own business. Okay, I need to only hire the very absolute best people I can hire, and I need to cut people really quickly if they're not performing. And I just advise, it's not that you shouldn't cut people who aren't working out. It's not that you shouldn't look for the very best talent. But the reality for most of us is that we're not Coinbase and Netflix, where we've got, essentially for maybe Netflix is failing a little bit now, but for the longest time, it was basically the most dominant player in its market. It was printing cash. They could afford to pay people well above market rates. They could hire all the best talents. But the reality there is that if you're trying to buy people, you're inherently getting mercenaries. You're getting people who are, if someone cares or is coming to your business because you're going to pay them more than anyone else, all someone has to do is come and offer them a little bit more money and they're gone.
They're gone.
So I just think that I'm seeing this kind of like hyper focus on like just the best talent kind of pervade the startup world. And I'm telling you that like, if you can find people who are good people, maybe they're unpolished, maybe they're not the absolute sharpest AI scientist in the world who graduated with 10 degrees from MIT, but they're just good people who care about your business and want to work with you.
Yeah.
And then you pour some effort into them. You treat them well with respect. You don't even have to pay them. You just respect them. You give them meaningful work and you train them and you show them that you care. You can go a long way with that. And so that's
far.
You can go so far with just good people who you hang on to, who don't turn over, who stick with your business. And so I think I kind of like call that out as a cautionary tale. It's easy to read the stories and the case studies of these big successful companies and go, well, that's how I have to treat my employees and I gotta be ruthless. And I think for most of us, that's just not the reality of the world. Most of us are working really closely with a handful of people and we want to like it and we want them to be there because they want to be there.
Yeah.
So
I talk about that a lot, and that's just leadership development style. I would every time choose somebody who has 2 years, 3 years of experience, hunger and an aptitude for growth and a desire to learn over somebody who has 15 years of experience and is tired of what they do.
Oh yeah.
All the time. My team is a great example. I've got some extremely talented people on my team that had no clue that they wanted to do the thing they are now doing.
100%.
It's a little bit of like being able to see talent and pick it out and taking a little bit of a risk on it. I use my head of tech and design as a perfect example. I said, hey, Neil, just trust me that you can do this and I'm going to teach you how to do it. The dude knows more about AI, trajectory of where AI is going and how that affects both marketing and sales. And he has learned every single web development platform there is. Like, he is a genius and he is so awesome to work with. And it's so awesome to see that and taking the chance. And that's one example. Every single person that I have on my team is in that same boat, right? Like taking a chance on somebody, giving them an opportunity, you're always going to see better results. Granted, you have to be looking at the right person to do that with, but that's where it goes back into the hiring process of HR and really kind of digging deep as a CEO to like find the people that you're looking for and know the people that you want on your team and know the people that are going to propel you to the next benchmark in your business. So yeah, we are on the same page there 1,000%. So, okay. We're coming to the end of the podcast here. The next segment is one that we like to call the takeaway shot. What is one piece of advice that we've talked about? If there was one thing that you wanted our listeners to take away from this experience, what would it be?
So as a human being, I would say, focus on your team.
Yeah.
Focus on your team. Like if you're not, you focus on yourself, become a better leader, all that stuff. My responsibility, my job and what I do, right? Like I just think people are so important. But then, a more practical and more kind of down to earth piece of advice is that your financial stack, the foundation you build around your business around finance is just so important. And some of you will take to it supernaturally and you'll really care. And in your own lives, like you do personal finance stuff, and you think, so some of you will just, it's like oil and water. You just hate it. And I'm just telling you, whether it's coming and work with Grasshopper or anyone else, like let someone help you build good, solid foundations, financial foundations to your business. The right banking partner, the right tax accountant, the right, accounting software, the right payment processes, all that stuff. It's just the rails on which your business will run. And if you don't understand it, if you don't know your numbers, if you don't really get it, it will come back and bite you in more ways than one.
Well, I think that is a great takeaway. Well, that's a wrap on today's conversation with Rob Burnett. And man, what a deep dive into the mindset and systems that actually move the needle for startups. If you're building something bold, this episode is your cheat code. Big thanks to Rob and the team at Grasshopper Bank for being champions of founder-first thinking in an industry that is often anything but. If you got value from this, do me a favor, share it with some person who is in the trenches building right now. And if you're loving the show, hit the follow button, leave a review, and keep riding this wave with us as we break down more bullseyes every week. Until next time, I'm Dustin Weaver, and this is Bullseye Breakdown.